In the previous clip, we compared the 20 and 50-day simple moving averages and wrote a simple algorithm so that when the 20-day SMA crosses above the 50-day, then go long on the symbol, which is Amazon, and mark it as invested. Now, if the 20-day SMA crosses below, then exit the position. And we try this out for the pretty much whole 2024. However, we can also use other simple moving averages. Why just 20 and 50? How about trying 10 days, right, which should be about 2 weeks, and 20 days, which should be about 1 month. I'm going to rename it to 10 day, 20, go everywhere, 10, 20. Same here, 10, 20. Let's also update the comment. $10.20, and finally 10 crosses below the 20-day SMA. Okay, we are going to keep the same year, same amount. Let's hit the backtest project button to see the results of this. While the backtesting takes place, I'm going to switch to trading view to have a closer look at what it actually means. This is Amazon. Roughly, this is the start of 2024, and it's going all the way to somewhere like here. So that's the 2024 with Amazon on the daily chart. We have some averages here. Let's do a bit of configuration and ensure we have the right ones. Here we have 10 simple moving averages with yellow, and let's set 20 simple moving averages instead of exponential ones with blue. Okay, we would expect that to have the first one somewhere here. We see the first cross above on 18th of January, goes all the way up. Here probably it will get out. Here it will get back in, get out, get back in, out, in, and out and in again. So quite quickly, then out, in, out here, back in here. Then it's going to get out over here. At least that should be based on what we see from TradingView data. Here are the results of the backtest. I want to go to the orders and see if they kind of match. So we have the first match on 30 of January. Okay, why isn't it here on the 19th? Probably because of the warm up, because it will need the first couple of it will take a couple of days. Let me show you. Here it says, okay, wait until it's ready. We could prevent that by going a bit back in time, so that the start date is something like this. So I say, okay, let's start it all the way back in December, so that it has enough time to do this warming up. Let's run again the backtest and see if that makes a difference. Meanwhile, we can keep having a look at what we get here. So it's getting out on 24th of April, which looks this looks okay. Notice we have the cross under, so the quickly moving 10 days moving average goes under. And then it comes back again on the 8th of May. Then it gets liquidated, and then it continues. So looks legit. Let's check here to see if the orders. Notice that the first order was already placed at the end of 2023, but it also covered the what we are expecting, the one on 19th. For now, let's say it's good enough. But what I'm curious about is to get a bit more explanation about the what we have here on the top. Equity, okay, we started with 100,000. With $100,000, we paid in brokerage fees about 36. Now we are up to 109. Nice. PSR, I don't know what that is. We're going to find out. And I'm going to take all of these and ask DeepSeek if it can help explain this output. Can you explain the output of Quantconnect backtest results? Here is a sample. Let's see what it has to say. And meanwhile, why not put it in parallel and also ask Perplexity about? All right, so let's see what are the explanations about. The first one, equity. Total value at the end of the backtest. Cash holdings, anything you might have. Okay. So you can have at the end of a backtest things like still have some position open, which is fine. Fees, this one was intuitive. Okay. Trading fees, all kind of commission spreads during the backtest. Okay. Holdings, total value of all the assets held in your position at the end. I will like a bit of a follow-up on equity and holdings. Okay. Net profit. This is, I think this is the most interesting one. I had a strategy. I had some initial capital, hypothetical capital, of course, 100,000, and now I earned 10,000 out of it. Okay. Profit to starting ratio, PSR, percentage return on initial capital. Net profit divided by initial capital, multiply, and then multiplied by 100. That's an interesting one. It says, even though I basically got 10,000, so roughly a 10%, it tells me that the profit to starting ratio, it's almost 25%. Return, this is clear. Annualized return of the strategy, average yearly return of the backtest period. Unrealized, this is profit or loss from positions that are still open. So at the end of the backtest, I'm assuming I still have some Amazon stock, which is bought, not yet sold, and it's a bit on the loss side, like the price decreased after I bought it. Total trading volume in dollars. Total value of all trades. So I bought and sold with my humble 100,000, 1 million and more. Additional notes. Okay, here we have more explanation. Equity, total portfolio values, fees, cumulative costs, holdings, everything in my portfolio, net profit, PSR, return, unrealized, and volume. Okay, fair enough. Metrics help These metrics are supposed to help evaluate performance, risk, and efficiency. Let's see what Perplexity has to say about exactly same output. Equity, total portfolio values, fees, okay, holdings, absolute sum of all items currently in the portfolio, total dollar value return. What? Probabilistic Sharpe ratio. And here it says profit to starting ratio. Why does DeepSeek and Perplexity have different results? Okay, curious which one of them is the correct one. I'll come back to that. Return unrealized volume. So let me go a bit here and say, okay, backtest results, even Quantconnect has some documentation. And here it says, probability that the estimated Sharpe ratio is greater than the benchmark. Aha, so DeepSeek made up a profit to starting ratio, while Perplexity put the correct one as confirmed by the official Quantconnect backtesting documentation. That's an interesting one. As with all trading aspects, always double check, always do your diligence. You cannot trust even the famous DeepSeek to be correct all the time.